Prices in the US have been sharply rising for a while. Not only do we refer to asset values like those for homes, stocks, etc., but also to consumer prices. Because every difficulty offers an opportunity, some people are profiting from inflation even while the majority of people are suffering because of it. Is it possible to make money off of this inflation? The answer is a resounding yes. Inflation is one of those things that most people don't understand. They think it's just when prices go up, but there's actually a lot more to it. Inflation is a tool that the rich use to make money, and in this video we're going to show you how they do it. Stay tuned to learn how the richest people in the world use inflation to their advantage. Way number 1. How rich people make money in with inflation. They buy real estate to make money. Real estate is an increasingly attractive option for wealthy individuals looking to make more money off of their investments over time. As inflation rises, so do the prices on real estate, making it a secure way to not only store money, but accrue value in the long term. Investing in properties can therefore be a great tool for people with a large amount of capital who are looking to build up wealth. Furthermore, many of these property investments can come with additional income streams from rent or other commercial operations, adding another layer of financial benefit to any purchases. For those lucky enough to have deep pockets and access to reliable advisors, real estate could offer major rewards that defy inflationary trends and generate considerable returns over time. Way number 2. They use debt to make more money. Rich people use debt to capitalize on the higher interest rates that often accompany an increase in inflation. When inflation rises, borrowing costs tend to rise as well, making it more expensive for companies and individuals to borrow money. By taking out a loan in a high inflation environment and investing that money into investments with higher returns, wealthy individuals can make large profits regardless of the money of inflation present. Additionally, they can use debt instruments, such as mortgage bonds or corporate bonds, to gain further financial benefit from their investments during times when inflation is low. This allows them to take advantage of rising rates and ultimately turn a profit no matter what level of inflation is present. One way that wealthy individuals can use debt to make money during inflation is through the use of mortgage bonds. Mortgage bonds are debt instruments that are typically backed by a pool of mortgages, and during times of high inflation, they can offer investors attractive returns due to their ability to reprice in line with ongoing inflation. By investing in these securities, individuals can take advantage of the higher rates offered and make money even when inflation is high. Way number 3. They buy cryptocurrency to make money with inflation. In today's era of digital assets, wealthy individuals have increasingly been turning to cryptocurrency as a means of making more money. Due to the potential for large returns and the fact that it isn't subject to costly inflation, many wealthy investors are utilizing this resource as an opportunity to make even more money than they currently have. Cryptocurrency often yields extreme gains or losses depending on market fluctuations. So understanding the risks involved is incredibly important before investing in such a volatile asset class. With careful analysis and studying of market trends, however, those with larger portfolios can benefit from cryptocurrency and use it as another avenue for increasing their wealth. Number 4. They also invest in stocks to make money with inflation. Rich people often view investing in stocks as a smart way to make money during times of inflation, as stock prices tend to rise due to the increasing value of money. By investing in stocks and selling them when their prices increase, investors can get more cash than they initially put in while avoiding the potential losses that come with other investments. While there is certainly risk involved with stock investment, many wealthy individuals see it as a worthwhile venture given its potential high returns. With the right information and strategy, investing in stocks can be an avenue for potentially big payouts for even bigger risks. An example of how stocks make money during times of inflation is through a process called capitalization. This is when companies use their foreign currency reserves to purchase additional shares in their own stock, increasing the share price and resulting in higher earnings for shareholders. For instance, if a company has 1 million shares worth $1 each, and then capitalizes by using their reserves to purchase an additional 500,000 shares at the same price, the share price will increase significantly as more people buy in. This increase in value could lead to large capital gains for stock owners during times of inflation. Therefore, it is understandable why wealthy individuals often invest in stocks to make money with inflation. Way number 5. They hold the real assets. The majority of people are unaware that money is a commodity that trades on the market, and that its price is influenced by a variety of factors, including supply and demand. Consider a hypothetical scenario in which there are 10 houses on one side and $10 in the entire economy on the other side. In this fictitious illustration, a single residence will cost $1. However, if we invest an additional $10 in this market, there will be $20, but only 10 homes, which would increase the price of homes where one home will cost $2. That is a straightforward explanation of inflation. When the economy was about to collapse, the Fed made the decision to inject trillions of dollars into the system to stave off a depression by issuing stimulus checks and purchasing corporate bonds. The current market's 22% of US dollars were printed in that year. Anyone with a fundamental understanding of economics could tell you that inflation is inevitable. Since interest rates were at their lowest, everyone who could afford a home at the time decided against storing cash and instead invested right away in real estate. Whatever the real inflation rate, 2.4 or 3.4%, it doesn't matter. Housing prices increased by 15%, and according to some estimates, even by 18 to 20%. This indicates that real estate investors made huge profits in addition to beating inflation. The best investor, however, went beyond simply purchasing homes and took out mortgages, as leverage can convert good purchases into excellent ones, particularly when interest rates were at historically low levels. Way number 6. They invest in gold. What sets gold apart is that it has traditionally been an asset that protects wealth, particularly in times of crisis. Here's how it works. Gold prices increase when the future appears uncertain. Due to the 2008 crash, gold prices increased in 2007 from roughly $600 to $1,000. Investors went into a frenzy and bought gold right away. The US currency may depreciate over time and perhaps lose all of its value, but gold never will. In contrast to the US dollar, which has lost almost 90% of its value over the past 100 years, gold has maintained its worth ever since the dawn of civilization. Gold prices reached a record high of $1,900 in 2010, as speculators once more panicked and began to buy gold aggressively. However, the economy has stabilized, and the gold bubble has popped. Investors typically avoid purchasing gold and instead place their money in assets like stocks when the economy appears to be expanding. Thus, gold prices frequently decline in predictable, consistent periods. But in 2019, when the US and China began a trade war, gold prices started to rise once more, and the pandemic made it worse. For the first time, gold prices exceeded $2,000 per ounce. History shows that buying gold has always been a wonderful method to profit from inflation. Way number 7. They diversify the portfolio. Rich people understand the importance of diversifying their portfolios in order to make money during times of high inflation. By investing in different asset classes such as bonds, commodities, and stocks, they can better manage risk and protect themselves from market volatility. This strategy not only helps them preserve their wealth, but also provides their opportunity for growth when prices are rising. Additionally, it gives them access to a variety of investments, which can provide higher returns than traditional savings accounts or CDs. With an effective diversification strategy in place, wealthy individuals can ensure that their finances remain secure, even during periods of economic turmoil. Number 8. They purchase foreign currency. During times of inflation, wealthy people often purchase foreign currency as a way to make money. This is because when the value of a country's own currency weakens due to inflation, that same amount of money can buy more foreign currency. By buying and holding on to this foreign currency, investors can then benefit from any future appreciation in its value. This strategy has been used by the wealthiest individuals for centuries to protect their wealth during periods of economic uncertainty or instability. It can be a risky strategy, however, and investors should always consult with an expert before making any investments in foreign currency. Number 9. Invest in precious metals. In times of economic uncertainty and inflation, many wealthy people turn to investing in precious metals as a way to make money. precious metals such as silver, platinum, palladium, and gold have proven themselves over time to be reliable investments that retain their value despite fluctuations in other markets due to their intrinsic worth. Investing in these valuable commodities is an excellent option for those looking for long-term financial stability, as well as a hedge against inflation. Furthermore, investing in precious metals can even provide significant tax advantages, depending on the jurisdiction where the investment is made. By taking advantage of these benefits, wealthy individuals are able to protect and grow their wealth even during times of economic turmoil. Inflation can be a powerful tool for increasing your wealth, but only if you have the right strategy. If you focus on investing in assets that maintain their value or increase in value as inflation increases, then you can protect and grow your wealth over time. Watch out for inflated prices on everyday items, and be sure to invest in something that will hold its value as inflation rises. With the right investments, you can make money from inflation instead of losing it. Now we're at the end of this video. If you got value from this video, you'll also like this video. Thank you for spending time with us.